I used to have to save it.
We're live. We are there.
All right, we're back.
Yes,
We're back.
We are.
we
Awesome.
are.
Any echoes? No?
No echo.
No.
Thank goodness. Well, we are back live, and this time it's for real.
We're live. We are there.
All right, we're back.
We're back. Are you
We are.
serious?
We
Awesome.
are.
Is somebody playing it on their phone? No echo.
No.
Thank goodness. Well, seriously? Do we hear any echoes?
I don't hear any now.
Okay, this is it. We're gonna keep moving. Okay, so tonight's topic is all around investing and entering the stock market, and we're excited that we have our special guest Tishina Anderson here. And I'm going to introduce Tishina real quick. Well, I'm Cara Dunstan, and I'm introducing Tishina, who has graciously come to help us learn more about the stock market, investing, and how we can all get more financially savvy. So I'll let the other good girlfriends introduce themselves before we get started. Marcy, would you like to go?
Hey, good evening. I'm Marcia Penn. Marcy, just glad to be here and grateful to once again be with my good girlfriends.
Happy Friday Eve. I am Juanita Tubman Q, and I've actually been in an investment group for the past 5 years, but I'm looking to learn a whole lot more.
Awesome.
And I am Regina, and I am, I didn't change my name. But anyway, I'm Regina, and I am happy to learn more, especially wanting to learn more. And I'm sure that Tishina will go to this, but about young people and what their limitations are, especially those that may be under 18, how they can get involved. So.
Hi, everyone. I'm Jeanette, and I want to welcome our new visitors to our virtual living room and say hello and welcome back to the good girlfriends that are joining us virtually. So I will just give my little disclaimer that we do not profess to be experts. Every week we have a different topic. We bring in a guest speaker and we share information. We don't profess again to be the experts, but we do like to share information as good girlfriends do. So I am ready to jump into our topic. This is a good one. I too would like to learn more about investing and getting into the stock market. And so let's get into it.
Awesome. So we're going to start with Tishina is going to hopefully share a little bit about her story or how she got involved, and give us just a little bit of background about you, Tishina.
Sure. First of all, let me just say thank you for having me, and hello, all good girlfriends. It's a pleasure to be speaking to you guys tonight and just to share my story and any expert advice that I could give from my experiences. So to tell you a little bit about myself, I'm originally from Baltimore, Maryland. I am a graduate from the University of Maryland, College Park. I started off as a teacher in the Baltimore City school system. And then I went into corporate America, and I was working for a company in the sales and had a sales background. I was looking to make more money. I had gone to school, I had school loans, and even though I felt like I had did everything right, I still felt like I couldn't get ahead. So I was 27 years old, and I got into the industry of direct sales. A neighbor of mine had introduced me into it, and she was in pharmaceutical sales, and I had saw her do really well with it. So I figured I would try my hand. In a short period of time, from back then when I was 27 up until now, I have in that time frame become one of the top people in the company. I've made millions of dollars. I've won awards, and I've also created several millionaires within my my organization. The success I had from that business helped me not only to make a lot of money, but I bought a $2 million home, Bentleys, Range Rovers, vacations. I was having a great time. And in 2015, we had a huge switch and change in ownership with our company. I really thought that my business was over, and all the money that I had made, I thought it was about to come to an end. Fortunately, that didn't happen. We had someone else take over the company, and I was able to rebuild my business during that time. Now, what happened to me during that time was I realized I was this young African-American woman who had made a lot of money, but I did not know what to do with it. So the minute that things got crazy with my company, I immediately started to really go into like, what should I have done different? How should I have used my money and put it away in the right ways? And so I live in a community of predominantly, we're the only African-American family, let me just say that. And I started off with, my neighbors had $5 million homes, businesses. And I started by like having friendships with them and talking to them and finding out what they were doing with their money. That led to me going to conferences and reading and investing myself. So prominently, most of the people were in the market. They were in the stock market. And that was the main thing that I kept noticing was it was like the same thing I kept hearing over and over and over again. And so that was what I decided I was going to learn how to do. So I use the stock market to do two things. I use it to not only invest for the long term to build a portfolio that I could live off of, but I also use it in doing trading so that I could actually make money now to replace some of the business income that I had lost. So through everything that I learned, I noticed I was doing business coaching because I was successful in business. And I noticed there was a lot of people who just didn't have any knowledge about the market. They had 401ks that they didn't even know what was in it. They weren't investing. And even the ones who were investing, they might have put their money with a financial advisor, and then we would talk about it, and they still didn't even know what was going on. So I wanted to create something different. I wanted to create a platform where people could get educated, where you want a financial advisor? Great. If you don't, great. But here's a platform where you could get the information and you could learn how to do two things. You could learn how to invest for yourself, and you can learn how to trade. So last year, I went from I sold like a few online courses, and I would just talk to friends, and I started by just like coaching a few people. And then last year I started to take it serious and turn it into like a full-time business that I was making sure that I was coaching people constantly. So all of 2020, I was doing a lot of coaching. Well, my coaching led to people having great experiences. They would always talk about their experience. And then not only that, they would share it with other people. So I would be flooded with new clients. And then I couldn't really take all the people because I'm only one person. And so I decided in 2021 to turn it into more of an online university. So now the way it's structured is I teach two topics, investing and trading. And I have everything online where you could go online, you could learn the information. And then there are some people who actually still want to get one-on-one coaching. So after they take the courses online, they get one-on-one coaching, they get to get their questions answered and make sure that they really understand everything that they need to do. I currently have people within the university. There's two things that I really focus on when it comes to investing is how much are you able to make passively a month. And I have people making everything from $1,000 a month up to about $20,000 a month passively in their long-term strategies. For trading is different. I teach people to start off with making $2,500 a week. This is active income where you have to be in front of your computer and you have to have your phone there and you have to be doing it. And I have people making anywhere between $2,500 a week to $10K a week. So those are the skills that I'm teaching. It's something that I had my success prior to this based on being able to do something and then teach someone else how to do it. And I just have a passion for that. I used to be a teacher in the school system, and now I just teach different things. I started off teaching business, and now I'm teaching finance. So that's who I am, what I do, and what I'm all about.
That's awesome. I mean, I've known Tishina pretty much her entire life. I guess probably almost your entire life. Yeah, almost your entire life. And I didn't know that story, but I love how it flows. You teacher and use those skills, all along. That's basically been the premise of what you've been doing, helping others. So that is a wonderful story there. That's awesome.
Thank you.
So I just want to start off with, so I know you said you had conversations with people and they told you about, they had their money in the stock market, but what resources did you use to learn actually about the stock market? Like, did you read books? Well, you said you went to seminars. So I know
I did. I went to seminars. I would read books. I would Google things. I would look online. And if I saw people who looked like they knew what they were talking about, I would take their course. I've spent thousands of dollars to learn different strategies, everything from growth to dividends to trading, to day trading, to swing trading. If I see information being presented, I usually purchase it. I buy courses, I buy whatever I see, especially if I see people who are actually getting results in that area, then I'll buy what they're selling.
Gotcha.
And then I'll try and I'll apply it and I'll see if it works before I teach it to someone else.
Mm-hmm. So when you started, like, did you start with a little amount just to test the waters, or like, I'm just curious, like, how did you jump all in, or did you just dabble in it, or?
Well, when it came to long-term investing, I just jumped in because that was a 100% proven strategy. After all the books and everything that I read, I was 100% comfortable with long-term investing. That's mutual funds, ETFs are typical when it comes to long-term investing. So I remember when I started my account, and I show everybody this, I started with about, I think it was either like $22,000, $25,000 my first time I put money into my account. But that's a very common way of investing. Most people are already doing that within their 401ks.
Yeah.
And so I felt really comfortable with that. It then became how to diversify, how to be strategic, how to know what to do, how much, and what is it going to get me, and how much can I live off of. It became more strategic the more that I did it, but that was a jump right in strategy. When it came to investing, the great thing about investing is that you don't really have to jump in with your money. You can actually start with paper money. So they have simulators that are out there that allow you to try doing it without risking anything. So this is how I teach people to practice first. So if you take what I've taught you and you practice it with no money being risked, or you don't have to try any of your money, then once you feel comfortable, and I typically have my students practicing for at least 3 to 4 weeks before they use any real money.
I never heard of paper money. I didn't know that.
Right. Yeah, I want to know more about that. Well, I do want to ask a question. So what do you teach people about how to make their 401k successful, or do you suggest not having the 401k and investing directly into the market?
No, so if you're one of my platinum members, people do come to me with their 401k and they ask me to kind of help them, just to be able to see if they could get better use out of it, make more money with it. Mm-hmm. And typically when I'm helping somebody with their 401k, and I have students and they'll tell you this, I'll show them how to increase their 401k over the next few years between now and retirement, a few 6 figures within their portfolio. So it really just is about rearranging things and making sure you have the right allocation and you're putting it into the things that are going to give you the best return for your money. So that is one of the things that I help people to do. Now, in reference to what do I recommend? Do I recommend you to put it in a 401k or outside of the market? I think people should be doing a combination of both. So if you have a 401k and they are providing a match, that's free money. I do recommend, that's the first thing, is to invest up to the match. Now, the next step would be figuring out how good is your 401k. Some people have better 401ks than other. They have more options to them. They have better choices. So let's just say you say, well, right now I'm putting in 20%. Well, if your job only matches up to 10%, but all your options are bad, you don't want to put the full 20% in your 401k if all the options are bad. You want to pick something outside of it because a lot of people need to play catch up. So you don't want to put all your money there where you could invest outside of it and make more money faster somewhere else because the options are better. So it really just depends on what you have available to you.
So that's interesting because I always thought, well, this is an education for me. But I always thought, you have a 401k, or for a lot of like public servants like myself, it's 503Bs, and that the options are just what they are, like that everybody has the same options. You just need to know which ones to pick. I didn't realize that the products were different.
Yeah. So when you're in the state and when you're in the government, like everyone who works in the government pretty much has all the same options. But if you're in the state, every state has different options. And if you're in a corporation, every corporation typically has something different, because when you work for a corporation, they basically get a financial advisor to come in and set up their program. And so it just depends on the company you work for, who did they get to set up their 401k? And that's going to be the options that they have available to them. And a lot of people 401ks have a lot of hidden fees that people don't know and don't see. Some people's 401ks have very limited options. So when you're in my course, I show you how to use platforms where you could get returns of anywhere between 30%, 50%. In my group, we even had some investments last year where people were getting 200%. Through a lady named Kathy Woods, who's like a big time person in the investing world. And she's been getting people like incredible returns. So because I sit and I watch this stuff all day, I'm always like seeing what's coming across, whether it be in the news or on different platforms that I watch. But there's a lot of options out there, whether you are from one company to the next, or even when you are outside of your company, there's still a lot of options out there.
Mm-hmm.
Do you mind going back and explaining to us what swing trading is?
Yeah, sure. So when you trade, trading is different from investing. So let me just start there. So investing means I want to put my money in and I want to hold it for a long period of time. The typical objective when you're trying to do investing is you want to live off the interest or you want to live off the dividends. So the whole goal of investing is never to use the money that you actually put in there. The goal is to just live off of the interest. And that's investing. So I put it in, I hold it, it makes interest, it makes compound interest, and then I put more in. And typically when you're investing, you invest every single month. So I put money in just like a 401k. Even when you invest outside of a 401k, your goal is to invest every single month until you get to a desired number. That number could be like $1 million. Let's say I get to $1 million and I live off of the interest. In retirement world, you're supposed to only pull out 4% of your money. So you can get to a certain dollar amount when investing and you pull out that 4% when you get to retirement, or in this day and time, you don't have to wait till you're 60. You can use the right accounts and you can retire before you're 60. But the word is retirement. When you get to that number, that desired number, you can then start pulling from it and living off of the interest or dividends. So that's what investing is all about. Trading is when I start with a dollar amount. Let's just say $1,000. I put that $1,000 up, I put the money in, I make a percentage. So I could put it up today at, let's just say 8. Well, the market's open between 9:30 and 4. So let's say I put the money up at 10 a.m. and I put up $1,000. If I'm trading, I am waiting for a certain period of time. And then what I'm doing is I'm trying to earn a percentage on my money. So let's say, I'm trying to earn a small percentage and I want 10%. So I look for that 10%. Once I get it, I then pull out the 1,000 that I put in with the 10%. Now, that's trading. I put up the money, I make a percentage, and I pull everything out. So nothing stays in the market. Everything comes out. That's what trading is. The difference between day trading and swing trading, day trading means that I get in, I make my percentage that day, and I get out that day. Swing trading means I get in and I hold it to the next day. And you can hold it to the next day. You can hold it for a week. You can hold it for a month. You can hold it for a year. But swing trading is I go in with the intention that I am getting in, I'm getting a percentage, and then I am then pulling out everything I made with the amount that I put in. So swing trading just means it goes to the next day and beyond. Day trading means I bought it and sold it in the same day.
So for 5 years, my group, we were swing trading and didn't know it. Okay, all right.
Yes, that's swing trading. Now, do you swing trade options or just regular stocks or futures, or what are you trading?
Just regular stocks.
Okay, so I don't teach stock trading. I teach, you could use some of the same principles to do stock trading, but I teach something called options trading. And then options trading is a little bit different than stock trading. So you can make money when the market goes up, but you can also make money when the market goes down throughout the day or the week or the month. Either direction, you can make money.
We did also invest because we had mutual funds. So
Okay.
a little bit of both.
Which
Or-
company did you invest with?
AXA.
AXA, okay.
Mhm. But again, we were all novice, very beginning, learning stuff, learning as we go. Yeah. And we were all Black professional entrepreneurs, women. And I would have loved to have met you before now to have you with us to, you know.
Yeah.
Can you go back and talk about the simulators? Is that what you called it? Simulators? Or-
Yeah, paper money, they call it a
Paper money.
simulator.
Yeah.
So there's not too many platforms that actually offer it. We use a platform by TD Ameritrade. It's called Thinkorswim. So it's a platform that they own. And you basically, they call it paper trading. They call it like the paper side, and then there's their live side. And it looks and does exactly what it would do if it was real money. And so you're able to then learn how to use the software system, learn how to get in and out of things, learn how to use technical analysis to be able to know when to get in, when to get out. And it's really good because I mean, I think it's good, especially for my students, because I would be afraid, even myself, to just start putting my money up and I have no idea what I'm doing. Especially when you're talking about options trading, because options trading, which is what I teach people, you can make money really, really fast. Like I had a young lady who was a stylist. She took a break the day before yesterday, and she made $4,000 in about 15 minutes. So, but let me just say this, you can make money fast, but in options, you can lose money fast. The good thing about options is a little bit, is it Juanita? The good thing about options that's different from stocks is that you're able to put up less, but get more. So like when you buy stocks, and sometimes in order to really see a significant amount, you got to put up 10,000 or you got to put up a good amount because you got to buy a lot of shares and then kind of like wait for the stock to go up. In options trading, you don't have to put up as much to see good profits. You could put up 500, you could put up, $1,000 and make sometimes 200% on your money. You can make, typically in a day, I can make 50% on my money on the amount that I put up. So you put up less, but you can make more in a shorter period of time.
So with the options trading, though, you have to be on and watching the market like all day long
No, not all day long. You have to be on and to trade and then watch it while you're trading. Like if you have an hour break, you can make money in an hour. If you have a good 30 minutes of spare time, you can make money in 30 minutes. So you don't have to like sit here all day, but you do have to be on to see it. And you can trade on your phone. I don't know how people, really do it successfully. You definitely need to see it on like a laptop or a desktop.
Mhm.
What would you say a minimum, what's the minimum investment? The minimum investment amount for either investing or trading, or, yeah. There a
Well,
minimum?
it just depends on what you're trading or investing. So let's just say you're investing and depending on your strategy. So let's just say you're using a dividend strategy, and a dividend strategy means that you want to live off of high paying dividends from individual stocks. You could buy AT&T. AT&T costs $30. It's one of the most popular dividend high paying dividend stocks that are out there. It's something called a dividend aristocrat, and it's like on everyone's radar. It pays a good, decent amount. So I don't know, it's trading for under $30. I think it's like 20 something right now. If you wanted to, you could get started with just that one share. If you wanted to use more of a growth strategy and you wanted to get an ETF or a mutual fund, you could get an ETF for under $200. You could get mutual funds depending on which company you're getting it from. Like Charles Schwab lets you in the mutual funds for cheap. They'll let you in for like $1. I prefer Vanguard, which they do make you pay $3,000 to get into their mutual funds, but that's just the broker that I prefer. So it just depends. It depends on what broker you are going to use, and it depends on what strategy you're going to use. And that's the important part, is knowing how to strategize. Okay, here it is. I am X amount of years old and I'm ready to start using my money. What age is that? Okay, so you have to know, when do you want to retire? When is that age? Because some people are starting late, so they're going to have to retire after they're 60. Some people are young, they're in their 20s or early 30s, and they can retire way before they're in their 60s if they start early enough. So everything is based on strategy. It's based on your age, it's based on when you want to retire, and it's based on how aggressive do you want to be. They recommend, and when I say they, I mean every expert out there, every major company, Fidelity, any financial advisor, anyone that you speak to, they'll tell you they recommend that people put 15% away of their paycheck for retirement. That is the standard of what they tell you to invest monthly. Now, do people do that? No, some people do less, some people do more. I think the minimum would be buying a share of something, and the minimum for trading is the same thing. You could get in for trades for $30. Doesn't have to be a lot of money, but what you put up is what you get. You put up $30, you're going to get a percentage off of $30. You ain't making a bunch of money putting up $30. So, you can get into the market very cheap these days. There's very low entries. Everything is online. They make it super easy and should be comfortable for people. My course is there to give you that comfort level. So I go into the history. I go into understanding how you're not going to lose money in the market, and how to create safe strategies so that you can feel more like it's guaranteed that you're going to go from point A to point B. So those are things that I teach people so that they can have a comfort level.
And there's an app for just about all of them, because I have the Charles Schwab app, and I do that one.
Yep. I've tried about every company. I've tried E-Trade, Charles Schwab, Vanguard, Fidelity, TD Ameritrade. I've tried E-Trade. I've tried Robinhood. I've tried just about everyone because I teach it. So I wanted to make sure that if I'm teaching something, I've used it and I can give a good opinion on it.
We have lots of questions on Facebook Live, so I'm going to try to read some of them. The first one is, ask if the options have a set it and forget it option.
Yeah, they do. They do have a set it and kind of forget it way to do it. So you could get into a trade and then you can basically set it to close if it gains a certain percentage. And you can also set it to close if it drops too low and you're not comfortable with losing that amount. So like if you don't want to lose more than 20% on your money, you can set it and walk away. And if it hits the high, you'll make your money. And if it goes too low, you won't lose too much.
All right. And then we have another question. Is there a strategy program that you recommend for teens and or younger adults to learn the basics of investing? If you've heard of Stockpile, do you recommend it to allow young people to learn about investment?
I think I get this question a lot. I think the best way for a young person to learn how to invest is for the parent to teach them. And I think that parents should know, and then they should teach their children. That's just my opinion as a parent. I have 4 children and I have 2 in college and I have 1 who is in elementary school and 1 who's in middle school. And for me, my son, I mean, don't get me wrong, he calls me every day with something that he's learned on TikTok or something about cryptocurrencies, and he'll try things himself and things that he's seen. So I do think that younger people are ready to learn this information. I've had parents who have taken my course with their child. I had a young lady who took the course and she had a younger son and he knew a lot. I was like really, really impressed. And this little boy was in middle school and she was like, I'm just trying to keep up with him and I'm trying to make sure I understand this. And so it was great teaching them because I was able to teach him a lot that he didn't know, but I was very impressed because he did know a lot. But I think the best thing is for parents to know, and then for parents to teach their children, because the way we change things is not just by them knowing, but it's by all of us knowing. And I think that if I don't know of any programs that teach like just children, information is information. So a kid can take any course, they can take anything. These kids are like super duper smart these days. My middle school kid was taking my course and my college kid was taking my course. So don't think that they can't pick up. They can pick up quicker than we can pick up things.
That is for sure. That's good. So I have a personal question. So if I've always invested in my 401ks at work, but I still am behind on what's suggested that I would need for retirement. Are there any strategies for those of us that are not at retirement age, but creeping along, getting there soon, and we need to catch up? Would you suggest I stick with the path I'm going here and maybe invest in the market, or should I be pumping more into my 401k, but really monitoring investments? I'm actually in a target date fund, so
and target date funds aren't bad. I think they're an easy way for people to invest who don't have a lot of information about the market. They usually, the fees aren't too high. They're like right there at a good level where they're not overcharging you. I say that everyone needs a Roth IRA. So if your job doesn't offer it, I say everyone should have it. And most people have to get a Roth IRA outside of their job. Okay. I don't care what you do, where you're from, who you are, everyone needs a Roth. They do have income limits, but there's ways around that because I know about that because if my income is high as well. So there's ways around it. But that's the first account I believe that everyone should have. So if you're investing in your 401k and you're looking for, okay, can I do more? I think the first thing that you could do is get a Roth IRA if you don't have one already. It has the best tax advantages of any of the accounts that are out there. The other thing I would say is to kind of figure out, do you have enough? That would be the next thing, that do I have enough? Will I have enough? And what is this going to get me? So when you're in my university, we go through a whole segment of you understanding based on, because it's different for everyone, based on your current expenses or what you think your expenses are going to be when you're in retirement. That's how you kind of judge, do you have enough money? Because you need to get those like necessity, those needs taken care of. If you don't think your house is going to be paid off, then you need to make sure you have enough money to pay that mortgage. If you think it is going to be paid off, then you just need to cover your bare expenses, food, travel 1 to 2 times a year in retirement. Everyone wants to keep doing that, right? And then there's ways of figuring out, okay, well, based on where I am today and when I'm going to get there, when I'm going to get to retirement, my returns that I'm currently getting in my account, what is that going to get me to? And in retirement world, you know that you've gotten to enough because you can live off of 4% of that amount.
Gotcha.
Okay. So we go through like a really detailed explanation of how to figure out every little bit and piece of that. But I would say that that's the second thing that you would need to do. First thing is have a Roth IRA. Second is to really have an understanding of what I currently have done already, what is that going to get me when I get to my retirement age? And then I think the next thing I would always say do is like start with education, start with a book, start with the class, start with the seminar, start with getting more information, and then taking the information that you get and trying it out and testing it. I mean, for me, it's not just like if I get information, but if I get information like 5 times in a row from 5 successful people, I pretty much consider that that's what gold is, right? If I hear it once, that's one thing. But if I hear it 5 times, or I keep hearing it every time I listen to one person and the next person, and they keep saying the same thing, then it catches your attention, but it really makes you say, okay, well, this must be the thing to do. And so that's why if you keep educating yourself, you'll eventually run into the answer, because people who've done things are going to keep repeating the same thing over and over again. So I would say then the next thing would be just to start with the education. I think we have to be interested in it. I find that it's one of those things that it's like out of sight, out of mind. We haven't gotten there. We're not thinking about it. I got other things to do right now. I'm busy. I'm working. I got kids. I got school. I got all this stuff going on, and I'm not thinking about that right now until you get close to that age. And then it's like, well, wait a minute, what should I have done? Hold up. And for me, I mean, I'm only, I say I'm only, but I'm 42 years old. But I think once you get to your 40s, you start to think, okay, wait a minute. I'm getting closer to that time. And how should I have prepared myself for that moment? So I think the more we're interested in the topic itself, we'll look into it more. We're smart. Black women are extremely smart. We know how to figure out anything. You can figure out things with your children, your husbands, you can figure things out. And I think that if you just take those same ways of figuring other things out in life and apply it to this, that you'll start to see the results from it.
We have another question. Ask if you train on spendthrift trusts. You know what those are?
Are you talking about like a government, the TSP?
I don't know. Sorry. Whoever sent that can give us some clarity on that. We'll keep going until we get. It says something about the trust will protect against capital gains. Spendthrift trust. I don't know.
No, I don't train on that.
Okay. All right.
Oh, I have a question. Back to the 401ks and the standard that 15% is the amount that you should be putting away for retirement, or as my mama and them would say. But I also agree, like if your company matches up to 6%, why am I going? So what I'm thinking about is that, so should you be doing the amount that your company matches, right? If your company matches 2% on up to 6%, and then the remainder, the other 9%, then you should be doing your own type of investing. Would that be a good portfolio, do you think?
It all depends, right? Because you have to know how much you already have saved.
Okay.
Right. So let's just say, for instance, you said to me, well, because people come to me and they've done different things. Everyone's story is different and the way they've done it up until this point is different. So say someone comes to me and they're 50 years old and they say, should I invest 15%? Well, the 15% strategy was supposed to be applied when you were in your 20s.
Right.
So it made sense to start 15% and just keep doing it. But if you say to start now and just do 15%, it's not enough. So if you can do more, then you should do more to play catch up. So it really just depends on, well, what have you done? And it's what have you done, right? So I'm this age and I've done this so far. I am 42 years old and I've already invested and I already have 200,000 in my 401k. Is that enough? Is 15% okay? And there's math that is involved with that. There's strategy that's involved with that, but it's really hard to just give an answer because it's not a clear-cut answer. What if I said, well, I'm 42 years old, I put away 200,000, but I want to retire in the next 10 years. Then I say, okay, okay, you're 42, you want to retire in the next 10 years, but what does your expenses look like? So if you're talking to me and I tell you my expenses are anywhere between $12,000 and $15,000 a month, I'm going to tell you, keep working. You need more time. This is not going to happen in 10 years, putting 15% away. So it really depends on what your expenses look like. What have you done already? And when is the date that you will want to retire? All of those things factor into how you make a decision on how much you invest monthly. I typically invest. I'm sorry, go ahead.
No, I said that was a very, very good answer. I'm that 50 plus year old
Okay.
person. Look, that you were speaking to.
Yeah.
Look, prophetically. No,
Yeah,
go ahead.
and
But that's a very good point.
And that's why when I do, a lot of people want to do one-on-one coaching because everyone's situation is different. Some people are coming to me and they've already put away $500,000. And so now they're like, okay, well, what else can I do? Or what else should I do? And we talk about it and we talk through it. Okay, let's look at your house. Let's look at your debt. We talk through all of these things because investing is not just about investing for retirement, but there's other things that go into retirement. There's paying off your home that goes into retirement. There's kids' college funds that have to sometimes be funded, depending on how many kids you got. You're like me, you got 4, and Lord knows, you need a whole bunch of money for each one of them. So, and then sometimes people say, well, but I also want to invest for my kids. So now we're talking about investing for you, paying off your home, investing for your children. And then there's like all of these moving pieces. And that's why one-on-one coaching is good, because I don't just give you a put 15% in and call it a day kind of answer. Absolutely. That's a standard. It is a standard. It doesn't mean that you're going to have what you need based on what you've done by the time you retire. It just means that that's a standard that this country tells you to put away, and you should be safe if you start early enough.
Good answer. I love that answer.
Have you worked with a lot of, I'm just thinking about a conversation I had with my mother recently. Have you worked with a lot of people who are already retired to look at their investments to how they can maximize those even more? I was saying to my mother, I mean, she's got great investments, but I was like, you might at this age want to look at them again. How's that work? Or a lot of people come in to do that? Or
so I don't have a lot of people like that, but I have had people and friends of mine that will say, well, can you talk to my mom? She's retiring. She has about 200 and something. And, she just wants to know what to do. And I have to be very, very honest that sometimes by the time we get to a certain age, our mind is not even trying to figure all of this stuff out.
Yeah.
It's just too much for sometimes somebody at that age. And so there are better things that they could do that aren't probably, I would say, the choices I would make, but it might be the best choice for them. Like they could put their money into an annuity. Mm-hmm. And it's kind of like guaranteed money for them because they're not going to understand the market. You're trying to teach somebody in their 60s about the market, and sometimes I don't find that that is always something that their brain is ready to learn, that new, all of that stuff that it takes to learn when it comes to the stock market.
So would it be more advisable for maybe an older person having a financial advisor? That way they don't have to get too deep in the weeds. Or I'm just curious on your thoughts.
Well, it just depends on what the financial advisor is going to do for them. Like, because some financial advisors are going to take your money and do something that they could just do themselves, right? So most financial advisors aren't doing a whole lot. They're just trying to set your stuff up and then prevent you from taking your money out. That's their main job, right? So it just depends on the financial advisor. Some people really have your best interest at heart, and some people have their best interest at heart. So, you know, it just really depends. I think that if I was talking to, you know, my parents, then I would tell them, you know, to, if they don't feel comfortable, like let's say they put money away, I might tell them to do an annuity, because I feel like that would just be the easiest thing for them to do. And then they didn't have to kind of like worry about it.
So kind of that set it and forget it strategy.
Yeah.
Gotcha. That's good to know. I had another question on here. I think I answered all the questions on here, actually. Oh, but I had a personal question. So you mentioned that you've tried most of the, I guess, their platforms, and I hear a lot about Robinhood. What are your thoughts around Robinhood?
My son uses Robinhood. I've had a Robinhood account. They have like the most issues of any platform that's out there. They have the most complaints. They have more people that have said they've lost money. I mean, they have a long list of issues that would make them probably not the best broker. I would never put my money with them for long-term investments, that's for sure. But what I do know about them, which is something, and the reason why they do have so many people that's using their platform, is because it's probably the most user-friendly platform out of all the companies. So if, like for instance, my son, he has a Vanguard account and he has a Robinhood account, and he prefers Robinhood because he thinks the platform is just more appealing to a younger eye. Both account does the same thing, but the Robinhood account just feels different when you're using it. So I think that where they have beat everyone else is the user-friendly platform that they have. But where I wouldn't feel comfortable using them and keeping a lot of money in that account is because they do lose people money, and they have a ton of issues that everyone's always complaining about.
Interesting. Good info.
Yeah, that was gonna be my question in terms of what's more user friendly, especially if you're just starting to kind of use a platform.
I just wanted to make a comment that I saw at least one of my younger cousins who's about to graduate from college, and just because we try to make this show generational as well, I know that, you know, my parents' generations, they had pensions. I don't have a pension. I have a 401k plan. But I have always, since first job, always saved and made sure I got at least the max that the company was matching in my 401k. So I just want to make a point in case she's listening still, that if you can save in your company, if you have that option, you take Tishina's advice and at least save up until and get the free money that's on the table. That's always a given, that you should start with that, even if you're investing, you know, externally or whatever. But that's the minimum you should be doing as you're moving into your career. That money adds up quickly through the years. So just want to plug out there.
It does. I don't think people understand how like well compound interest works. Like I give examples of, if you give a child $20,000 when they're 20 years old, and you just put it in something as simple as the S&P 500, which gives an average of about 10% return, by the time they're 60 and ready for retirement, they'll have $1 million, and you don't have to add to it, and you don't have to do anything to it. So if you have a 40-year-old who has about 140,000 by the time they're 40 that they've invested, when they turn 60, even if they don't add anything to it, it'll turn into $1 million. Just starting early, I have kids. My kids have investment accounts. My youngest, my 8-year-old, we've been investing for him since he was 5. You know, you can start your children off. You can give them a better life than maybe we didn't know about this stuff. And I don't want any, I say, you know, a lot of times when I'm training and talking to people, they're always like, they feel so bad. They're like, why didn't I know this? I should have known this. And I would have done more. I would have started earlier. And I always just say that we have to give ourselves grace because this information was not available. You know, our parents didn't know about this and they didn't teach it in school. So where was we supposed to know how this information, you know, how to do all of this stuff? So, you know, we have to start our kids off a lot sooner than what we started, because now we have access to the information.
I have a question. You talked about reading books. What book would you recommend for a novice to just, you know, begin to learn about investments?
One of my favorite books is by Anthony Robbins. It's called Money Master the Game. It's a really good book on investing, on your finances. It's huge. It's a big book, but it does give you a wide variety of everything, you know, to learn about.
Very good.
And then there's a book by a Black guy. His name's Chris Hogan. He has 2 books. One is called Everyday Millionaire. And the other one is called Retire Inspired. And he's one of my favorites. I really like him.
Awesome. Any other questions, ladies?
Yeah. Let me ask you, what suggestions would you have for a company that is currently no longer doing a match? Like due to, would you, you know, advise someone to increase their percentage in their existing 403B or 401k?
So if your company isn't doing a match, what I would do is I would review the current investments within the portfolio. And I would take a look at what the returns are looking like. And what you want to do is you want to compare them. So you want to compare what they have with the return, and it's called the expense ratio, which is the fee that's being charged. So I would compare that, and I would compare it to what's on the open market. Can we find you better things that are giving you a better return at a lower fee? So I would do a compare and contrast. Would it be better to do this, or do you still have good options inside your 401k? Just because they don't give a match doesn't mean you shouldn't invest inside of it. You just need to kind of like look into it a little bit more and see, are the options good enough for you to put your money there?
Great. Thank you.
So I have another question, and I actually do have someone who manages. I have an IRA account, and I have someone who manages it for me. And I agree with your point about some financial advisors are better than others, because I have had an experience where I had a financial advisor who lost a lot of my money, and my financial advisor now, I'm very comfortable with her investment strategies. We discuss it. We have meetings. She shares with me. We talk about these things. But I'm wondering how often I should be doing that, or what are your thoughts around that? We do it. We talk about it in spurts, but we have a sit down once a year to figure out my risk levels and to make sure that my goals are still in line with what she has been. And I'm very pleased with the results. So far, based on my limited knowledge, I feel like I'm moving in the right direction, but I'm wondering, how often would you suggest that we be looking at our portfolios? Or
I don't know if it's a matter of, like, if you have a financial advisor, for me, what I would want to know is, first of all, what is the fee that the person is charging me, because a 1% fee sounds low, but over your lifetime of investing with them is typically about 20% of your profits.
Mhm.
So for me, if the fee is 1%, that's a lot. And I had a young lady who received an inheritance and she had a lot of money and she had it with a financial advisor and her fee was out the roof. It was about 2%.
Mhm.
And I was just like, why are you paying this? Like, well, tell me what the person does for you. And she's like, well, I don't know. I meet with her and then and if I want to buy something, I'll just tell her and I was like, so what, like Amazon, all of that? Yeah, like if I want individual stocks and I want something, I'll tell her about it and she'll look into it for me. And I'm like, oh, okay. And I said, okay, so if I can show you how to look into stuff yourself and then just buy it yourself, do you need to pay her a 2% fee? And well, no. Okay, well, what else does she do for you? Does she add anything or change anything? Well, no, I pretty much have the same thing, she said, since I've been with her. I said, so, okay, she's not adding to it. She's not really changing anything. So when you meet with her, what's happening? Well, we're just talking about it. I'm like, okay, but you do know that you don't have to continue that. Like, you don't have to keep giving somebody a percentage of your returns. And all they're doing is just having a conversation with you. And I think what happens is having a financial advisor feels comforting to most people. But to get a financial advisor license, somebody literally takes a class to get a license, and then they take a test to get a license. So, and a lot of them sometimes don't even have a huge portfolio themselves.
Mhm.
So it's not to me a matter of how many times you meet with her. What I would want you to do is I would want you to know what is she really putting you in. So you need to know every single fund that she has you in, which strategy is she using for you. And I would show you how to look at what she's buying for you, look at it on the open market and being able to analyze what she is doing for you, because this is your life and you're putting your whole, like, how I'm going to take care of myself in somebody else's hands.
Mhm.
So the biggest thing isn't how often I need to meet with her. The biggest thing is, do I even know what she's doing?
Mhm.
Do I know how much these fees are? Does she have me in things that are high fees? What are the returns? What are the returns based on last year on average of what other things were returning? Does she have, you might say, oh, well, I got 10%. Well, last year my account got 33%. So if you got 10% in one of the highest times that the stock market was up last year, then you didn't get a good return because you should have got a great return last year. So it really is knowing the difference between when someone is doing an okay job for you and when they are blowing it out of the water, which is what you need in order to get your money to that level so that you can live off of it.
Yeah.
So you can, so like, let's go back to the Roth. So if we have children, we can open up accounts ourselves. You don't necessarily need a
You
financial
can.
planner. So we can-
A Roth IRA is something that you can. My children has a Roth, but they have to have earned income. So if I have a small business, so even my younger children are employees basically, and I pay them. And they do have Roth IRAs, but that is not typical. Most people either don't have a business or the kid doesn't have earned income. So that probably wouldn't be the best account for them.
I have to say, this has been very insightful. Thank you.
You're welcome. You're welcome. You're welcome.
Very nice. And I really appreciate, as Jeanette said, insightful, but just how, as an educator, as you said, that you just really explained it in a way that just seems like, oh, wow, or, I didn't know that, or I thought I knew a little bit of something, but you broadened it, or I didn't know any of that. So just so very helpful, even how you explained it.
That is my gift. God gives us all gifts.
Yes.
That is my gift.
So funny because that's exactly what I was sitting here thinking. I was like, you can see that you were walking in your gift.
Thank you. Thank you. I appreciate it. I appreciate it. I love this. And what I love most about it is it's something that we need that a lot of us don't have and don't know. And that was exactly why I created what I did and the way I created it. I'm really good at knowing how people need to learn things to make it simple for them. And so even in my university, when you take my course, you take it and I teach it in a certain order so that you can receive it the right way and apply it. So my university, just to talk about that for a quick second.
Yeah, I was gonna ask you, perfect.
We're just getting ready to transition to that. I was like, perfect timing.
Perfect, yes.
And I'll just make this announcement that every week we highlight an African American female-owned business, and you are a business that we are highlighting tonight. And we've had some comments in our Facebook Live already. People are asking, how can I get more information about your training coaching program? So please, at this time, please share all of the details about your university. What's the name of it? Contact information. I will put all that in the Facebook Live for the watchers to receive.
Yes, absolutely. So it's called Freedom University, and the website is www.thefreedomuniversityonline.com. So let me say that again, www.thefreedomuniversityonline.com.
Got it.
That's the website. The way my university is set up is I have two packages. I have a gold package and a platinum package. My gold package includes an 8-hour investing course to teach you all about the stock market and how to create a long-term strategy for yourself. It shows you how to go online, how to start the account, how to analyze the investments, how to create a strategy. I go over all the investments that I have, my children have. I show you my complete setup of what I do for myself, how I strategize every year, and even how I strategize for my children. I give you all the books and tools that you need as well when you're a gold member. Not only do you get an investing course when you're a gold member, but you also get 2 live group coaching sessions every single month. During these sessions, they last anywhere between 1 hour to 2 hours. I go over new content, so I teach you new things. I also expand beyond what I teach in the course. And I also make sure you get your questions answered. So sometimes people have questions from either taking the course or something that they've learned or something that they want to know more about or more details about. So you get 2 live group coaching sessions, and then you're able to watch all the previous group coaching sessions as well. Now, my gold membership costs $497, and that's an upfront fee that you pay. And what that pays for is the investing course, and it also pays for all the previous group sessions that you've missed, but you get to catch up on them. So you pay the $497, and then there's a $27 a month membership. This is for you to get ongoing support, to get ongoing training, so that you can also become, be in our private Facebook group. In our private Facebook group, people talk about what they're investing in. They talk about their returns. They talk about their trades. And so it's just like a community of people who are serious about their money and serious about building a large portfolio. So that's the gold membership. My platinum membership is $1497. With that upfront comes with not only everything that you got in the gold membership, but you also learn how to trade options. So you get an options trading course. You also get 4 hours of one-on-one coaching. And you also get 15 minutes every single month being able to book a call. It's called my office hours. So it's $1497 upfront, and then it's $27 a month for your ongoing support. So I have a gold membership, platinum membership, $497 upfront and $1497 upfront. These are my current prices. I started my course off as an introductory course to really just get it out there and and to get it started. Usually to learn how to trade options is typically $5,000 just to learn that trade, because you can make a lot of money in it. And it's a very unique trade to have. It's not the same as trading other things like stocks. The money can be made a lot faster. So you need someone to teach you every little intricate part about how to do it. So it's a more expensive trade to actually learn. So my courses will be changing next month. These are my prices now, but next month they'll actually be changing.
All right, I put all the contact. I have Freedom University and thefreedomuniversityonline.com is the website, and that's the best way for them to reach you, right? Through the website.
Yeah, and I'm on social media, so I'm really active more so on Instagram than any other platform, and I'm on there as my name, Tishina Anderson, Tishina, Anderson, Anderson.
Okay, I'm adding that too.
And I do have a special, I created a special coupon code for you, for any of the ladies who would be interested, to give you 10% off if you were interested. You just would have to put in the code girlfriend and you'll get 10% off up until next week.
Awesome. That's so nice. 10% off. I'm putting that in here too. All right. I think I answered all the questions on Facebook Live, but if not, we will direct them to your Instagram and they can ask you directly. So I've got all the information in here, and this was very informative for me. I can say that I am much more focused on retirement every day, trying to get there.
Me too.
I have told
Definitely understand that.
I have told people for the last 30 years that my best job would be retirement. So how to get paid for it. So I appreciate you coming on, Tishina. It was really great seeing you too live. I haven't seen you in so long, but
Absolutely.
it was beautiful as ever.
Thank you.
Inside and out. So it was such a pleasure having you here with us. And ladies, always great to be with my good girlfriends. And I hope everyone out there will have a blessed week. We hope that we've been a blessing. That's always our goal, is just to be a blessing to someone. And we'll see you all next week. And we don't know what the topic will be next week, but we'll let you know soon. So everyone have a wonderful week. And thank you for joining us.
Bye, Facebook.
Thank you.
Bye,
Good
ladies.
night.